Someone's sound is reflecting backwards, echoing.
Everyone must switch it off.
Everybody needs to switch off. Otherwise, we will have a problem with bandwidth.
Yes, yes. I see there are more people joining.
And then we should use the chat room as much as possible on the right.
Yes, definitely. Definitely. Let me just type in a message in the chat room there to let everyone know to mute.
Jafina, will you be recording this?
Yes, I will be recording. I've actually already started recording it.
Okay.
I see Vanessa is on the line.
Yes, I just admitted Vanessa.
Hi, guys.
Okay. Hi, Linda.
Hi, how are you?
Hi, Trifina, Prof. Henry.
Hi, Linda. How are you doing?
Good, and how are you?
Good, under the circumstances.
we all under house arrest, I guess.
Yeah.
Okay, we have quite a lot of people joining.
Trifina, can I just say that, sorry, Trifina, can I just say that if people just want to see us, they must go to the top of the screen where it says speaker view. If you just push on that, then you don't see everyone and you just see the speakers.
Yeah.
Yes, speaker view. That's. Let me admit there's one more person joining. Okay. Welcome. Hello, everyone. I think we can now begin with our webinar session. Thank you very much for joining us today. It's a very interesting topic that we are going to be discussing today. So as a way of introduction, I'll introduce myself and then I'll introduce the speakers as well who are joining us today. My name is Trifina Hokong and I'm the founder and CEO of Triumphant Zoe, which is a property development as well as a quantity surveying business. And I'm going to now introduce our speakers for the day. I'm going to open their bios and I will be doing a little bit of reading. Please do bear with me. We are joined today by Professor Francois Viruly, as well as Mr. Henry Chitsulo, as well as Mr. Linda Dotwana. So just as an introduction of Professor Francois Viruly, Francois Viruly is a property economist with over 25 years experience in the analysis of the South African property market. He is the associate professor and lectures in urban economics, property development, and portfolio management at the University of Cape Town in the School of Construction, Economics, and Management. Francois held the position of chief economist at the Chamber of Mines, and he was head of research at JHI Professional Services, Valuations, Research, and Legal Services, as well as the acting head of the School of the Construction Economics and Management at Wits University. He is the director of Viruly Consulting and a fellow of RICS, which is the Royal Institute of Chartered Surveyors, and is presently sitting on the RICS Marketing Advisory Panel for the Sub-Saharan Africa. He is immediate past president and executive director of the African Real Estate Society. And he also heads the UCT Nedbank Urban Real Estate Research Unit. He is also a member of the Institute of Directors, Southern Africa. Wow. quite a wonderful bio here. Professor Viruly has undertaken extensive research into the South African property cycle, the drivers of the South African property market, and the relationships between the urban economics and the property markets in sub-Saharan Africa. And we will be tapping more into some of his insights, looking at the current situation that we're going through. And he is also a non-executive director of the Accelerate Property Fund. Welcome, Professor Francois Viruly. It's very wonderful to have you with us today, and thank you for giving us the opportunity and the time to just have this discussion and sort of a debate in terms of the property entrepreneurs and the space that we are in right now and how we can overcome this impact of COVID-19.
Thank you very much. I look forward to the discussion, and thank you very much for the very kind introduction.
Thank you, thank you. And before we the discussion, I'm going to go ahead and introduce our two other speakers as well. I'm going to continue now with Mr. Henry Chitsulo. He is Henry Chitsulo has 5 years experience in investment banking and real estate. He was previously the director in the property finance division at Standard Corporate Investment, the manager of real estate equity investment at Absa Bank Limited. Already combined experiences between Mr. Henry and Prof. Francois, we're talking about over 50 years experience. Henry has been involved in the listing of a number of the JSE and has served as a non-executive director on the boards listed property and property asset management companies. He was part of the team that successfully concluded the first commercial mortgage bond securitization in South Africa, and he was also involved in the financing of a number of developments, such as the beautiful V&A waterfront in Cape Town, which we all love, the JSE in Sandton as well. And Henry has also facilitated the Johannesburg Property Company Turnaround Strategy Workshop. He consulted for Gauteng Partnership Fund on the Entrepreneur Empowerment Property Fund program, which aimed at assisting emerging Black companies to participate in the affordable housing rental market. And he was involved as the implementation manager for the Novena Consortium, the successful bidders of the Inner City Property Scheme. He is the program manager for TUHF, which is a program that seeks to train entrepreneurs, which is comprehensive in-house property training program that seeks to promote the expansion and the knowledge of TUHF's clients in the property. And the program was also developed and delivered together with TUHF and the University of Cape Town. He has been involved in mentoring property entrepreneurs for the past 5 years. Thank you so much for that, Mr. Henry. And he is also past chairman of SAPOA Convention and a board member. He is one of the founding members of South African Institute of the Black Property Practitioner. He is the chairman of the Property Development Program, as well as SAPOA's executive course, which runs jointly with UCT. Welcome, Mr. Henry.
Thank you, Francina. Just to mention that this program between TUHF and UCT, Prof. and I have been running this for TUHF for the past 5 years. And we are going to share some of our interesting insights over the 5-year period when we have been running this program for TUHF entrepreneurs.
Yes, thank you very much. Now I'm going to be introducing our third guest speaker, Mr. Linda, who is here with us as well. Okay. Okay, so Mr. Linda Dotwana is a portfolio manager at TUHF, where he started 9 years ago. Prior to TUHF Limited, he worked for Absa Limited, a consultant in the commercial finance division, focusing on affordable housing, residential developments. introduction to the residential property financing came in the early 2000s when he joined the National Housing Finance as the NHFC as a manager and in the alternative tenure division. He studied financial accounting and auditing at the University of the Transkei in Mutata, called Chitsulo University, and also completed the Property Development Program, PDP, at UCT at the Graduate School of Business, and is both a husband and a father of 2 children. Out all the introductions.
Open for those of you who are new to Zoom, and then just push on that, and then it really makes a big difference. Sorry, Tafina, I don't want to take over your. Okay, let me just start by saying the following, and that is that we entered the COVID-19 already on a bad foot in South Africa, in the sense that we've been on a cyclical downturn since about December 2013. So I think things were already difficult as we entered here. Things were relatively weak as well. And I think that this is what we entered with. Now, invariably, we have a problem. First, the real estate sector is only expected to open up from the commercial side at level 3. From the residential side, residential broking only opens up at level 2. So you can well imagine the period that we are sitting with a sector that can't really function completely at the moment. The deeds registry is opening. I think it opened up this week. So I think we will start seeing the transaction, but it's not a full office either. So that's going to take time. Where will it impact on the market? I think that we first of course, have a problem that there are some people who are at the end of their leases at the moment, and they can't leave. They can't go anywhere. They can't move. You've got new people who are supposed to take over their leases who also can't go. I think the other thing to bear in mind is that we have people with businesses at the moment who are in financial trouble. So you have individuals who want to sell their property in order to improve their balance sheet of their business. And if they can't do that, they end up in trouble. Look, at the end of the day, it will vary depending what sector you're in. If you're in the retail sector and you're not getting your rental, I mean, if you're selling clothing, if you don't sell it this month, maybe you can sell the clothing next month. If you're in a restaurant business and you've lost the day of restaurants, then you won't be able to sell that. It's an evening that's gone, a night that is gone. And I think that becomes the important thing. My final observation is that everybody's going to have to come to the party in this. The investor comes to the party, the tenant comes to the party, the municipality comes to the party, and hopefully the bank. And I suppose the only issue that I would raise here is to say, make sure that at the end of this process, people want to do business with you. You'll be remembered by the way one has conducted oneself over this period, and that includes both the banks and everyone else. And so there won't be, it will take time to get out of this. Some people argue it's a short and then back up. But I mean, I'm just doing some work where brokers and others will last 1 month or 2, and the businesses come under enormous pressure after that. So we will get out of it, but I think we'll have that discussion later. But when we get out, everything will be fine, but I think it will be different. Okay, I think I'll leave it.
Thank you, Prof. Francois. Henry and Linda, would you like to add to that just in terms of the general overview of the current economic situation that we are in and its impact on the property space? Oh, sorry. I think you are muted.
Yeah.
Yes.
Okay. Can you hear me?
Yes. Hi, Henry. You are breaking up a little. You are breaking up a little.
Am I breaking up?
Okay,
no,
now it's better now. Yes.
Now it's better. Just to add to what Professor Viruly has mentioned, if you look, we had the downgrade of South African sovereign risk to junk status. And with that, what is the COVID-19. But what I would like to do is I just wanted to share this screen with you so that you have an appreciation of what this is going to. I just need to share this screen. Can you see this screen?
Yes.
So this is from the Reserve Bank. So the Reserve Bank is saying that if you look at the businesses that are likely to be declared insolvent, that we're looking at about 1,600 businesses. And the number of people that are predicted to be unemployed, this is when the lockdown was 21 days. We're looking at about 370,000 jobs. Now, compare this with what happened in 2008 and 2009 with the global economic crisis. We had about 900,000 job losses, and the South African GDP shrank by 1.5%. However, with this pandemic, we are looking at the economy to actually shrink by about 4%. And a lot of the people that are, this is where a number of the entrepreneurs actually play in. Let me just
there's a button for stop sharing.
On top, on the top. Go to the top of your screen. There's a red thing there. Stop sharing.
Oh, okay. So if you look at where we are sitting, a number of the people that are being affected, it's your emerging entrepreneurs. And these entrepreneurs have had challenges prior to COVID-19. And a number of the challenges that the entrepreneurs have been facing is, I mean, we all know things like equity, or actually inject into a development. So if you're going to be doing a project that is about 10 million rand, by and large, the equity contribution that funders expect from entrepreneurs is about 20%. So 20% is about 2 million rand. And I think if I look at...
Today is 4 hours, 15.
Sorry, Molambilo, please mute. Thank you.
So if you're talking of a 10 million rand project, right, which is an inner city residential redevelopment, you're looking at an expected equity contribution. And remember, this is unencumbered equity of about 2 million rand. And very few can write a check for 2 million rand. So equity has always been a big problem affecting entrepreneurs. The other challenge has been, there's been competition from your seasoned property players. And a lot of these seasoned property players have got the balance sheet. So you find that an entrepreneur has got now to compete with an SA corporate, which is a listed entity, or with an INDLU, which is also a listed entity which has got a balance sheet. And that becomes a challenge. especially for entrepreneurs. And Prof. Viruly and I have been working with TUHF entrepreneurs. And one of the biggest problems that they've been having is this erratic bill by the local municipalities. You find that you get a bill for an apartment that has got 10 units of about 1.5 million. And this takes, if not 3 to 5 months for that to be sorted. And in the meantime, the municipality will come and switch you off. Once you are switched off, your tenants stop paying rentals. So these are challenges that has been happening prior to the COVID. And the COVID has just added what is going to be happening. And a lot of the people that are being affected is entirely your emerging entrepreneurs. And I think there's going to be adding to that, especially this is the space that he has been involved.
Yes, thank you, Mr. Henry. I mean, definitely looking at that unemployment figure, I can imagine that the property entrepreneurs who are in that rental space in the residential market, if one of their tenants all of a sudden is unemployed, there's no way they'd be able to pay for the rental. So perhaps Linda, Mr. Linda can elaborate further in terms of some of the challenges that the property entrepreneurs are facing currently.
Trifina, thank you. So I think Prof and Henry have summed it up nicely. This pandemic has certainly placed us in uncharted waters, in the sense that we now all of a sudden are faced with multitudes and multitudes of our clients who would be your typical property entrepreneurs who, as a result of their tenants experiencing economic hardships, are not able to honor their obligations to TUHF.
Tambile, please mute. Thank you.
So our clients, which would typically then be the property entrepreneurs, are now faced with a situation where they are unable to service their obligations to us as the lender. And this is as a result of their tenants having suffered economic hardship. So a lot of people have lost employment, particularly those that are in the service industry, and also those that are in the hospitality industry. So those have been the worst hit or the hardest hit. So it's an uphill battle in terms of now us pulling all together to try and formulate plans to make sure that there are relief measures that are relief packages that are put together to try and assist our clients to see them through this pandemic. So that's where we are at the present moment. And I think it's still early days. As a matter of fact, this morning, there's a meeting that we had. We're looking at the overall situation that we're confronted with, and we're trying to then formulate plans in terms of now what relief measures we can then be able to offer to some of our clients.
Thank you, Linda, for that clarification. Thank you to all the speakers. And I'd like to talk a bit in terms of you've just mentioned the relief funds. There has been quite a bit of different relief funds provided by CEDA, NEF, for small businesses that can tap into loans of about 500,000 going upwards. I just wanted to get a feel in terms of, from your perspective, do you believe that getting a loan of 500,000 can really sustain a business? Is it something that a business should even look into in terms of sustainability into the future or not?
It's a difficult one in the sense that, remember, most of these properties that entrepreneurs acquire, there would be a large debt component, as high as 80%, you know, which debt component would then have to be serviced on a monthly basis. And because of the situation that we all find ourselves in now, some of these relief measures are loans that would have to be serviced at some point. So the difficulty is that you are then going to be acquiring additional debt, and with no prospect of you growing your revenue line, and at least not in the foreseeable future. So I reckon that probably for the next 6 months, tenants are going to still be experiencing economic hardships. And now the question is now, if you then go ahead and then acquire this additional debt so as to keep your business afloat, how are you going to be servicing this? Because you are going to be further indebted, and the chances of your tenants being able to make up for this rental that remains unpaid for the months, say, of April and May and beyond, there is no likelihood of them being able to make good on that debt that they would have accumulated. But I'm not saying those relief measures must not be considered. All I'm saying is that you obviously need to approach them with caution. You need to appreciate the fact that they are loans, and by them being loans, they need to be repaid at some point in the future.
Yes, thank you for that. And Henry and Prof. Francois, would you like to add anything to that?
Maybe, Francina, if I can just add to what Linda has just mentioned. I think one needs to actually look at these loans, because already you are in debt, and all what you're doing is you are actually adding that debt. And if you look at the current situation, your funders normally look for what is called your debt service cover ratio of about 1.3 to 1. And when you go and get additional debt, it's very difficult for you to actually meet some of those covenants, which is going to be a challenge. But if some of those covenants were in form of things like an interest-free facility, or in a form of a grant, that can actually help in order to alleviate the cash flow challenges that has confronted a number of the entrepreneurs. So one needs to be very careful so that you don't end up breaching some of those loan covenants.
Thank you. Thank you for that. Prof. Francois, anything?
Yeah, look, I think it comes back to the point that I made earlier, that for this to ultimately work, everyone has to come to the party. You know, we've seen it as well in the commercial property market, where you have individuals who say, "Oh, I can't pay." Well, yes, but please show us your balance sheet. You know, it's not as easy as that. You know, show us that you can't actually pay your rental. Prove it to us. Open up your books. And one thing I have seen over the last certainly few weeks, where there's a hardening of the stance. And so, yes, I think that some of these funds assistance will help, but I think it is equally important that the tenants, commercial and residential, also go to their banker and see what they can do. You know, I'm just being a bit careful that this is largely being pushed onto the property owners.
Yes, 100%. I mean, just talking about the payment of rentals as a property owner, and having tenants who have now had to exit, you know, their office space or their retail space, and saying, well, it's a force majeure. We've had a situation, you know, an act of God that we are unable to, you know, continue working in this space. What kind of protection is there, you know, for both tenants and property owners in that regard? I mean, I would imagine that if someone is using an office space, they don't need it anymore, you know, but of course the property owner should also have some form of protection.
Yeah, and that's what we need to actually fund, and in the same way that municipalities are also to some degree coming to the party. And then the question is, what do you negotiate? Do you pay later? Is there an extension of your lease? Is there and how is this going to be done and agreed upon?
Yes, definitely. All right.
Sorry,
yes.
Just to come in there, I think what has been happening with a number of your major retailers, they've actually gone to the landlord trying to negotiate for a discount. And then I think you have seen that they were actually, they could not meet because the tenants were looking at paying 20%. And the landlord was saying, no, 20% is not going to be, is not going to be enough. So there has been almost like a dichotomy. So they could not meet each other. That's why it's important for everybody to actually come to the party. Everybody would come to the party, and then we all need to be working together.
Yeah. All right. I'm going to go to the chats for some of these questions related to what we've been discussing now. Fulufelo is asking, does this mean that if I'm in the process of buying a house, I can only do so during level 2, or is it different if the bank has already approved the bond? I'm not sure if anyone is aware of what is currently the situation with bond applications. Anyone from the panel can answer that question?
Yes, the bank has approved the bond, right?
Yes.
And now we have seen that the deeds office is open. So that transaction should be able to go through because the deeds are opened, but I don't think that they are going to be operating at full capacity.
Yes. I see Francois also answered that and asking whether actually the paperwork done and transfer, and that is unlikely because the deeds office is closed. Yes.
Well, it's not. It's not only that the deeds office go, but your broker can't operate at the moment. Conveyances are also stuck at the moment. So you'll find it very difficult to get the transaction through. So I think what the deeds office is doing at the moment, it's getting through transactions that had taken place prior to the COVID closure and taking those on. But I don't think it's taking on new work at the moment flowing through the deeds.
All right. Thank you. Thank you very much for that. We've got another question here from Pierre saying, to the panelists, are the banks coming to the party regarding a moratorium on monthly loan repayments or allowing for interest-only payments? That's the first question. And secondly, what other options are there or available to property owners?
Okay. I don't know if Linda
can I take that?
Yeah.
I think all the major banks have come to the party. They've actually come with relief packages. For now, they're looking at the next.
Simangele, can you please mute? Let me see if I can mute her from here. Please continue, Henry.
So there has been these relief packages that the banks have come up with, and a lot of those currently for the next 3 months. And then we've also seen a number of these relief packages that the government has actually also initiated. So these are all there to actually assist a number of your a number of the borrowers. So the packages are there, but the only thing is that for now, a lot of those are limited to a 3 month period.
Yes.
Look, I must add to that as well, and that is, I think, and you may all prove me wrong, I think this level 4 is not going to last very long. I think there are already signs from Department of Trade and Industry on Friday saying, well, we're going to move to level 3. I mean, this level 4, which is a lockdown in disguise, a bit, I don't think is a sustainable game. It's costing too much. All the exceptions, I believe the other day there was a discussion of 8 hours, whether you should open up children's clothing but not adults, and when are you a child and not a child, and so I think that we're going to shift quite fast. But I don't. What worries me is that, like I said, broking and the real estate operations are in the residential at level 2. I just don't understand that. Look, maybe this is not the place to talk, but actually the level of physical contact in a property transaction is relatively low. It's you and maybe one person, but it's not a factory we're opening, But anyway, that doesn't help you immediately. But yeah, maybe Linda wants to add about something.
From our point of view, we have suspended all credit decisions for now. So the only transactions that we'll consider are already transactions that would have been in the pipeline already just before lockdown. So those are the ones that will then proceed. Certainly after the conveyancers are open for business again and the deeds office. I must say though, I must also add that the environment has definitely shifted. So what we then anticipate would be instances where some of the deals that we have already approved, where we anticipate a situation to arise where now the client or the property entrepreneur will then approach us and then say, you know what, I'm not sure about this anymore because the environment has shifted. And likewise, I think we'll also then be looking at those deals to see whether we still have an appetite to proceed with those transactions. So it's going to be a two-way street. So there might be instances where we then say, yes, we're good to go. And there might be instances where the property entrepreneur says, now since developed COVID.
100%, Linda. I definitely can see that business is not going to be business as usual post this COVID-19. For instance, when we're looking at the student accommodation, it was a very much, popular asset class just before this COVID hit. And now we're looking at situations where all the universities have had to shut down. And obviously the property entrepreneurs who are looking into that space would definitely have to shift gears because there'll be high implications in terms of, do people still stay at the student accommodations, those kind of situations. What would you like to share as the panel?
No, but I mean, that's so true. And I think the student market, I mean, for example, at UCT, we don't expect our students to come back before the 5th of October, right? Now you can imagine what that entails. And of course, now you have the students who have paid for res and for things saying, I want my money back because I'm not there. And you can see how that escalates. But I think you've made an interesting point. And that is, will things be the same? I think I heard somebody say that if you are not looking at restructuring, re-looking at things, you'll probably not, you'll probably be missing the game going forward. So it's certainly not more of the same as we get back. The connections again, what people will become important, which means, now we're all locked up. We understand the importance of our home, and suddenly somebody says, that extra room is maybe worth it if I'm going to start working a bit more from that environment. So I think that there will be issues that will alter. It goes the whole way from airline businesses changing their view. So I think it will take a while if we ever get back to normal. But I think we also have to prepare ourselves for virtual visits of buildings, of properties, use some new technologies in there, automation. So really that this is also a time, and I take the point that Henry made, and I think everybody has been making, is have a very careful look at what you're going to be doing.
Yes, thank you.
It's certainly not going to be business as usual. It's certainly not going to be business as usual, Trifina, because I'm also thinking that I think more and more companies are going to start interrogating now the office space that they have, and the questions are going to be along the lines that do we still really need the level of office space that we have contracted for, and maybe there's going to be some downsizing emanating from this. And yes, certainly I think working from home is going to be the norm. So I think to your point about student accommodation, so we've always taken the view as TUHF that you need to configure your facility in such a way that it can serve both the family letting residential market and the student market. So in other words, don't configure your student accommodation facility so that it only is suitable or caters to students. So now, certainly now, if now there is going to be a lot more distance learning or virtual learning taking place, then you may have to then, certainly for those entrepreneurs that configured their student accommodation facilities like your typical dormitory type, will have to then invest a lot more to try and then repurpose those facilities. But if you had configured your facility in such a way that maybe it's a block of flats that happens to be tenanted by students, then there is less of investment for you by way of then having to repurpose your facility.
Yes, thank you very much for that very good point.
Sorry, Tripina, just to add this, I think prior to COVID-19, there was always this mistrust between employer and employee, whether an employee can be able to work from home. And now they can see that people are able to work from home. And this has now changed, or this is going to change the way companies are going to be viewing the office space that they have. If people can work from home, why do we need to have these posh offices in Sandton or in Claremont?
Henry, my only point there is that if companies do that and they have such savings on their rental, they should pass it on to the salaries of their employees, who are now paying a bigger mortgage at home. So give everybody more increase in their packages and tell them to stay at home. Plus, on top of that, you'll probably be saving 30% of your income because because you're spending less petrol. 30% of our income is transport costs. Staying at home is 30% saving. As long as you've got a job. But what I'm saying is that companies must just, okay. Anyway.
Sorry, Francois.
Yes.
Sorry, Dotwana, can I quickly come in here? Yeah.
Yes, go ahead.
Yes, Francois. Yes. Just a quick one. In a way, I think this is a kind of a shift in the whole way of thinking about this. And you're right, we should have a paradigm shift in our businesses. But from an architecture and urban design perspective, I think that the buildings that are very much purpose-made is going to suffer. The ones that are generalistic buildings is the ones that are going to be easier adaptable. And I think there might be a rethink in this iconic buildings that's purpose-made for one client as an iconic manifestation of the brand into more generalistic buildings that can be adapted to other uses, like the old European cities are. I mean, I think we've changed from very much an old. I think the whole new urbanism is going to become more. My camera's off. And I think that the whole thing of the modernism, where we had everything separated and everybody in specialist buildings, I think that's going to change. I think we're going to have different cities coming out of this, not just a way of working. And again, transport as well. I think transport is going to change a lot in terms of whether we're going to even want to move around and whether public spaces are going to be used. I mean, how do you build public spaces for people who don't want to touch or to be seen with other people? I think there's more than this than just the business change. I think there's some more of a way of using our cities. And again, that'll do a lot in terms of the bid rent, locational factors, what is actually accessibility for that matter. Accessibility as a matter of digital accessibility might be worth more than physical accessibility. I'd like to have your views on those.
Yeah, I completely agree with you. And I think that one of the things is the flexibility of buildings. The problem we have in property is that we build for the long run, but the economy is changing so rapidly. Most companies don't know where they're going to be in 3 years. And I think I think we're seeing a bit that with parking, where parking can be converted, where your height is increased a bit on the parking, so that you can turn it into retail space in one day or the other. But look, I think you're right with shopping centers. How can you reinvent your shopping center? A high street evolves. I mean, go travel through the old towns of Europe, and those buildings have been there since the 16th century and before. And so, yes. And then I think the other thing which you're raising, which is interesting, is the importance of public space. If you're going to work from home, you should be able to walk out of your house and then walk into a decent, where shops are around and so forth. So I think what it does for urban environments, commercial nodes, whether residential nodes, all of that becomes a lot fuzzier. So yes, absolutely. And I think we're starting to see that in our homes right now, where we're using our homes as offices, as a place where we sleep, and we're seeing all those functions. I also see a comment here about the 30%, that 30% of income supposed to be used for petrol is now being used for more food, more electricity, setting up your office, buying your printer. I think that is so true. But I think what is raising, and I think Linda's as well, is how we're going to see work, what we're going to offer. And it even crossed my mind. We all spoke of things like the WeWorks of this world and so forth, working close to each other. Look, I'm not saying that this is going to be a complete change, but I think what it does do is it accelerates a lot of the technologies that we were looking at. Even the Zoom discussion. We could have done that some time ago, but we didn't. Maybe it's nicer to be face to face. But you know what? Getting all of you here. How many people are here? A lot of people at the moment.
At some point, there were about 70 of us.
70 people into a room where you would have had to cater for everybody and get everybody together. Here we can organize something like this, So I think what somebody said, the technologies of the next 3 years, this will have accelerated those technologies and the way we look at things very rapidly. And yes, and so I take Gert's point as well, is how we're going to use space.
Yes, definitely with technology, we have to trust it a little bit more. And also looking in the retail space, I've seen, some shops have really gone online and developed their online stores, which, definitely is important at this current time, because people don't want to, risk their lives and go into the malls. The malls are closed, and post this COVID-19, I think people will be trusting shopping online more rather than actually going to the physical store. And that is, convenient for the shopper and the shop itself. And perhaps even talking about the cities that Gerald mentioned, we have the plans, most plans by investors and developers. There was Ekurhuleni, a Rotopolis city, a Rotopolis city that was supposed to be built. And that was going to be a zone where, people can travel, sort of like Dubai, where it's tax-free and people can come in and out. And now looking at what is happening with the traveling ban, tourism industry has completely been on hold. And so obviously most developers and investors would hold back. They become defensive at times like this. So we've seen, most projects being put on hold. And so obviously that is going to also have an impact on the property entrepreneurs. And what are some of, your suggestions and opportunities that we can see, post the COVID-19 and how we can actually come out of this moving forward? Maybe Henry can talk to this point.
I think every crisis presents opportunities. And I think right now, there are people that are eager to take the money and run. So there could be opportunities. There are people that have been sitting with land, and we know that land does not generate an income. And there could be opportunities now, but it's for those that have got the money, that can go and basically look for those opportunities and try to harness on that. So as they often say, we don't plan to fail, but we fail to plan. So it's important that we plan our things properly.
Yes, thank you very much for that. And I believe also just in terms of the sustainability of small businesses, property entrepreneurs moving into the future, that would also heavily rely on collaboration, no longer working in silos as stand-alone individuals, but looking at opportunities where we can collaborate and bring together and harness together the power of the togetherness and, different specialized skills, an interior designer coming together with an architect, with a quantity surveyor, with a developer, bringing all our skills together and being more collaborative with our efforts in order to overcome this situation that we are in. Someone once said, if you want to go far, go alone. But if you want to go, if you want to go fast, go alone. But if you want to go far, go with others. Yes.
Look, obviously there will be opportunities coming up as we get through this. There's a big problem at the moment, even with valuations. Can you value a property in the scenario? There are certain valuers who refuse to value, and I see some companies are kicking the can down the road at the moment and say we will value these when there's some normality in the market. So invariably, but I must say that investor confidence has declined considerably at the moment. And I saw something that came out of the RICS, the Royal Institute of Chartered Surveyors. This is one of the countries where investor confidence has dropped considerably. And I think what we also have to, and I'm going to try to be as realistic as I can here, we also have, it's not, the economy was already in a poor state. And so I think we've got other things driving this than just the COVID-19. And I think we've got to keep an eye on that. Now, we saw the re-rating of the country on the Friday when the lockdown happened. We saw another re-rating last week. And I think, so I think that there's much to get through, but I would still argue that one of the better sectors to be in will probably still be the residential. Look, as we entered this, the residential property market capital values were rising by 11%, even higher. I think one has to always remember that about 70% of all the properties on the deeds registry are below £1 million. I mean, that's most of the properties that we're looking at. So there is a need for housing. There is, yes, the economy will move down and sideways and we'll have a problem. But I think fundamentally, as long as one stays in that 400,000, 500,000 to 1 million, I think that the property market there has performed well and will continue to do so. I mean, last year, the average on the property market was 3.5%. The upper end of the market showed no increase. At the lower end of the market, not even the lower, I'm saying most of the property market, 70% of the property market still saw capital growth of 10%. So yes, there will be people who will find it difficult. I doubt that many banks will repossess. It's not in their interest. Certainly find themselves. But I'd like to have the views from Linda and Henry about this. But I think the problem is that the regulations don't allow you to throw the tenants out either. So I think that's where the problem is.
Yes, Henry, would you like to add to that?
I think what we're going to see is basically the banks managing their current exposure, instead of them looking at new deals. So unless you come with an exceptional deal, then the banks will look at. But currently, they are just going to be managing their books. And we saw this with what happened in 1998, when the prime interest rate went to 25%. Very few people were doing deals at 25% interest rate. But interestingly, in this current market, prime is at 7.75%. So there could be also some opportunities for people to be looking at deals. And I think those deals will be on a case-by-case basis, where the banks will be basically looking at your seasoned property developers who will come with an exceptional deal.
Thank you. Thank you very much, Henry, for that. Is there any question from the participants?
Let me just also have a look. There was the one where the banks can repossess, whether you can kick out your tenants. I think,
oh yeah, someone commented here saying the relief packages by the banks are not adequate as they extend the loan repayment periods. That is lockdown, Nkonzo. Anyone would like to comment on that?
Look, the relief packages are not going to come, and they are not going to be the entire solution. This is just to actually assist. So already, like what you have said, a number of the entrepreneurs were already struggling prior to COVID-19. So this is there just to assist you. And if you look currently, they're looking at 3 months relief period. And who knows, maybe they might be extended.
Yeah, who knows exactly. And then King Dave is also asking here, I was in a process of advertising my property for student rental after finishing flipping it. Then coronavirus happened. So with the current focus and the future focus, do I still stand a chance to make it for the rest of the 5 to 6 months left, meaning to get tenants? That's his question.
I think, student accommodation was the new asset class. Everybody was now going into student accommodation. But if you look at what has happened recently, like what Francois has mentioned, I mean, apart from the delays from NAFSAs, student accommodation is not going to be that new asset class anymore, because things have now changed. People are now going into e-learning. So we are likely to be seeing some more vacancies coming in. If I'm in your position, you need to structure that deal so that it can also look at your normal affordable housing and demand for that.
And then there's another question here from Lockdown. Why can't the Reserve Bank give free money to the banks to finance mortgage bonds, which would then trickle down to the property owners? Wouldn't that be nice? Hey, just print the money.
Well, yeah. I suppose it's 200 basis points lower, cheaper at the moment. And I think that interest rates will still keep on dropping. You know, I mean, yesterday I listened to the commissioner of SARS, who is already short of 285 billion rands. You can imagine transfer duties, VAT, everything else playing its role. But I think, yes, I think the Reserve Bank will try to stimulate the economy as much as they can. But you know what the problem is? Even if you reduce interest rates, it can help the balance sheet, of course, with people with higher LTVs. But it doesn't create confidence. You've got to create confidence, you know. Otherwise, even at a low interest rate, I'm not going to borrow money to do something.
And someone is also asking, actually, are the relief funds at the same interest rate as the bond from the bank? That's a question from Itumeleng. I believe that CEDA is giving actually prime minus 4 or 5% actually. But I can't confirm that. But I know that the government loans are much cheaper than the bank loans, because the banks will probably give you prime plus. The panels can correct me if I'm wrong.
Yeah, look, I think the relief packages are cheaper. The interest rate is lower than what your traditional banks would actually lend you at.
Yes. Okay. And then there is another question from, if you could bear with us, I know an hour has already passed. Let's just give it another 15 minutes if you can, panelists, just to close off some of these questions. All right. I see here, will I succeed in getting an eviction for a disabled tenant who has been in arrears for 3 months already? That's from Johanna.
No.
No.
Yeah.
No evictions for now.
No evictions.
Wow. That's quite hectic.
I think
all right.
The regulations even stipulated, I think.
Yeah, it's illegal to evict people, actually. And then there's another question. If you are in arrears, the banks won't give you any payment holiday and no relief loan. Okay, that's a comment from Smangele. Monica is saying, so what are the bargain property assets that are out there at the moment? As other properties going in distress, there will be entrepreneurs out there that are ready to buy.
Well, take the example which I'm seeing certainly in the Cape Town market at the moment, and I think I mentioned it in the intro, that you had people on short-term leases, Airbnb, and so forth, who are finding themselves in trouble, especially with the whole hotel industry in the States that it is. And those same individuals are now looking for long-term leases. I mean, we all love long-term leases, but I think so. I think you'll probably start seeing in that sector of the market people second home, holiday homes, properties, and I think what you're also going to find is those secondary properties that, you know, when your restaurant is closed and you've got to generate cash, you're going to try to sell that property, you know, to actually keep your balance sheet going.
Yes, thank you for that. I never even thought about how hotels can actually start really having rental leases, long-term leases. That's quite something I didn't think about. And then Clara is saying...
You may have to repurpose those hotels, Triumphant.
Yes, definitely.
So we've had instances where some of our clients buy hotels and then they convert them into residential accommodation.
That's a good one.
Well, it comes back to how we can repurpose.
There's also opportunity.
Sorry, Henry, you are breaking up.
Sorry, I was just mentioning that there's also opportunity for social housing. And I think SHRA has got those grants that are available. If you can go through the process, there is an opportunity for you to get grants of about 271,000 per unit with SHRA specifications.
Oh, yes.
And then maybe the other thing which I'm also hearing is the conversion of restaurants into stores, you know, where the restaurant doesn't work anymore. I'm picking up, I just ordered something that used to be a restaurant. They're now selling the cans and the honey, which they would normally have on the table. You can buy it almost as a store from them. So you have operations that are starting to shift the way that they are going to operate, or may have to get out of it.
Yes, thank you for that. And then Clara is also saying here that intelligent office design has for many years proposed the idea that office space should only be planned for a reduced workforce, and the employer has been the stumbling block in this. So I think this is commenting in that discussion we had in terms of remote working and working from home, and employers having to trust employees. Okay, that's more of a comment.
That idea will now resonate with the employers.
Yes, definitely. And then someone is saying, certainly agree with Linda, commercial property will suffer going forward as humanity has now learned to work, study, church, and dine at home. Therefore, residential property will be a winner out of this. Yes, I think that is what most of the panel has been saying. And then,
Trifina, do you know what the other problem is from working from home? Is, like I said, we may walk out of here. Of course, now we're totally isolated. But, you know, working from home, I miss the people that I like, but I'm also missing the people that annoy me. You know, when you're normally out, in this world, you end up talking to the people you want. So in normal life, you also want to see people who irritate you. So, you know, we've got to get out. We've got to have it.
Yeah, that's true. But I think this time has allowed us all to reflect on those things and try and mend those bridges, realizing that life can be short. So you never know.
Yeah.
All right. And then Pulifelo says, laugh out loud, that 30% of income supposed to be for petrol cost is now being used for more food. Yes, we read this one before. And also more Wi-Fi and data. And then Clara is saying a longer day, 16-hour days with 2 shifts of workers coming in because of remote working. I have been on so many of these meetings myself. Mohapi says, they say every crisis presents opportunities. What are the potential property opportunities? I think we've discussed that point. And I don't want to now start repeating ourselves. And what else is there? I'm looking for more questions. Can the bank repossess during this lockdown the property because I can't pay as all my tenants aren't working? That's a question from Smangeli.
Not now. Not in this environment.
I think it's highly unlikely, Trifina, because for many reasons. I mean, look, I think all lenders have got credit control measures. But those credit control measures are not designed to cater for the numbers that we're currently looking at. So and this particular property entrepreneur is probably not the only one that is in trouble, you know. So there's multitudes and multitudes. So and so if the lender is to proceed and then initiate foreclosure proceedings against this particular entrepreneur, so there's going to be many of them. What is the lender going to be doing with all the stock? Who will the lender be offloading the stock to? So I think this is the time to work with clients. I think Henry, or was it Prof, that said that we should all then be working together now, trying to find solutions to this.
Yes,
because lenders are not in the business of repossessing properties or items that they're financed.
And the moment when you start that, the values of those properties start to come down. So after the end of the day, the bank will ultimately lose if they start doing that, because the values will definitely just drop.
Look, and it comes back to the point that I made earlier, which is, and I think it's true for all of us, the way we treat out the tenants, the way the bank treats the owners, that you, when this is over, that you want to do business with somebody. You know, everyone through difficult times. I think that you want to walk out of this where people want to do business with you after the lockdown. And there'll be people that you don't want to do business with again after the lockdown as well.
Yeah, definitely. We have to look at post-COVID, yes.
I think the big issue is for us to be working together now and for us to show a lot of empathy.
Yeah.
Yeah. All right. I think I'm going to leave the questions there because I think some of them are repeating themselves and we have run out of time. I don't want to keep our panelists for too long. It's already been over an hour now. And I just wanted to open, the floor to the panelists for their last word. And thank you all so very much for giving us your time, your expertise and your insights in the current situation that we are all facing. I believe, we've all taken out something here that is going to give us some hope, knowing that, it's not all over and we can see a little bit of light at the end of the tunnel. So thank you very much for your contribution to that. And so you can have, time now to just give us your last remarks. Thank you very much.
Would you like me to start or?
Yes, please, Prof. Francois.
Okay, look, I think we're going to go through a difficult period. There's no two ways about it. And it comes back to my point. Everyone has to come to the party. Linda was making the same point. I think that's the way we're going to get through it. The banks have to come, the tenants, the owners. There's a whole value chain. And everyone has to play their role to some degree in this. This is not something that anyone could have foreseen. I do believe that we will get out of this. I don't think that the level 4 is going to last very long. I think that the cost to the economy is just too high at the moment. Yes, human lives comes first, and I'm first to admit that. But I think what is happening at the moment in the townships, economically wise, small businesses, and as they say, for every small business that goes under, you need about 100 people. 100 people have to think about things for one business to be successful. Businesses aren't started up that easily again. And I think that's what we're going to watch out for. And then my final observation is, like I said, everything will be fine, but it will be different. And what I would suggest as an entrepreneur, have a very good look at your business and say, how different could it be? And am I appropriately attuned with the new way that things are going to happen? And that may well offer its opportunities. Okay, let me leave that up. Thank you.
Thank you. And perhaps you might also want to share with what UCT is doing with the online programs. Are there any online training that is available? You did mention earlier that you would also share with the UCT and TUHF's collaboration.
Yeah, of course, we're looking at everything else. I'm having discussions with Henry, and we're going to have it with TUHF. It's how we go forward with our programs. Invariably at UCT, we've gone online, but our universities are not online. It's what I call emergency remote teaching. It's an emergency. It's not an online program where, if you want to do online properly, you've got to spend a lot of money. These programs are not up, but they are to get smarter programs. In fact, we are seeing that the numbers on our online learning programs are carrying on and the numbers are not declining at this point. So people are doing that. So I think that there are opportunities to carry on with that. We will come up with something, but what we're not going to do is provide a sort of emergency remote learning. If we're going to do it, we're going to offer a proper online program.
All right. Thank you very much, Prof. Francois. Mr. Henry, some closing remarks?
So basically, we all need each other. We need to work together. We need to pull together And that includes the banks, the tenants, and more importantly, this is the time for the municipalities also come to the party. We need them. And we need to see some changes happening. And I hope that when we all work together, Trifina, that's my parting shot, that we all need to be working together.
Thank you, Mr. Henry. Thank you very much. Definitely collaboration is the way forward in the future. Mr. Linda, some closing remarks?
Well, I would also like to echo the importance of us, all parties working together now, and that relationship being characterized by openness, and that there are certainly going to be opportunities on the other side of this lockdown. But at the present moment, we are going to go through some terrible pain. But if we endure the pain, we will definitely take advantage of some of the opportunities that are definitely going to be presenting themselves. Thank you.
Thank you to all of our speakers today. Thank you very much. And I'd also like to thank all the participants who joined us today and also shared some of their insights. We really appreciate you coming through. Part of the reason of having these discussions and webinars is just to make sure that we are all staying connected and we are looking at, you know, where are the opportunities for collaborations and also just how we can continue to build on our relationships. I believe we've met in different platforms and we should continue keeping in touch with one another. So thank you all. I will be sharing the recording that I'll be uploading on YouTube. So you will get it if you did register on that registration link. If not, please just send me an email and I'll be able to share the recording with you. Thank you very much and enjoy the rest of your day. Goodbye.
Thank you. Bye.
Bye-bye. Thanks.
Thank you. Leaving.
I've unmuted all.
Imports and exports, purchases, prices, and also business.
Bye.
Bye. Bye, Trifina. Thank you so much.
Bye. You're welcome.
Bye, Trifina. Thank you.
Guys.